Sherwin-Williams, the paint guys, announced their quarterly earnings today. Their EPS came in a little short, missing by 5 cents at $4.52. Their revenues beat by just over 50 million at 3.7 billion. Now, I love paint. It's delicious. And paint by numbers, that's so easy. I'm almost perfect at it. Sherwin-Williams had a lot of other good statistics. In fact, their margins were down a little bit. That's not too bad. They're finding a way to make the costs a lot lower, which means hopefully that transitions into them making more money. Their core performance stuff was up. The coatings, the performance coatings, it was up like 40%. 40% year over year is astonishing. Sherwin-Williams, clearly, they make a lot of stuff from not just the paint that you use in your house, but like Duplicolor and stuff that they use on cars when they're repainted. They make some fantastic paints. So Sherwin-Williams is definitely one of the forerunners in the paint industry. So Sherwin-Williams found that same-store sales were up 5%, and a lot of the segments were up single digits or just into the 10+%. But the street didn't like it. There's a reason. I don't know what it is. The street didn't really seem to be feeling what Sherwin-Williams was doing today, but again, I'm not big on the intraday trading. You know what I think it is? I think it's that the street just woke up this morning and realized that everything's been up. Everything's been up for 2 weeks now. Earnings, revenues, everything's been up. And what Sherwin-Williams missed, even though they missed EPS by just a little bit, it doesn't matter how delicious their paint is. That little bit of a miss, the street knew they had to pull back on somebody. Sherwin-Williams catches that intraday wrath a little bit. But let's let this quarterly report settle before we really decide how well Sherwin-Williams is really doing. Take a further look into the quarterly report. Do your research. Consult a financial advisor, a professional licensed financial advisor.